Asian shares came under pressure today after Chinese markets were hit by soft economic data over the weekend. We're unpacking all things China with Kerry West Fynn, Chief Executive of Alpha Wealth. Kerry, thanks so much for joining us once again. Always great to have you. Let's unpack the numbers that we got out. We weren't expecting positive numbers, industrial production numbers, fixed asset investment numbers coming in weaker. What do these numbers mean?
Thanks, first of all, for having me on the show again, Timmy. I appreciate it. I think, yeah, as you said, I mean, I don't think anyone in the world was expecting massively positive numbers this month. But, I mean, they did fall short of expectations across the board. I mean, generally, apart from one or two sort of standouts like retail sales, for example. But, you know, again, I think, you know, one just needs to look at this in context. You know, it's 1 month's numbers sort of versus a year ago. I mean, I think we have been seeing sort of a progressive slide in China's numbers. And I mean, they're slightly under. I mean, I guess, you know, people are just mainly worried about the uncertainty. You know, the world's in this whole sort of fear on sort of risk off trade, you know, at the moment. And kind of anything that sort of upsets the apple cart is sort of pushing markets lower and sending investors into a bit of a panic.
Yeah, I hear what you're saying about you know, these being one set of numbers. I hate looking at one data point and like drawing all sorts of conclusions. I mean, a beat on retail sales, a miss on fixed asset investments. You sort of think like the conversion between the you know, more infrastructure-driven economy to a consumer economy is actually happening faster than anyone expected. But I mean, you know, obviously with the rate hike, you know, coming up, do you think these numbers are going to affect the Fed's thinking? And I mean, should we be trading these markets on the back of the Fed at all? I mean, you know, we look at China; they've done 5 rate cuts in the last in the last year. It seems to have had no effect on their market. I mean, should we be worried about the Fed rate hike?
Yeah, it's a good question, Gary. I mean, I was listening to what you were saying earlier and sort of just saying, like, you can't wait actually to get this kind of Fed rate hike story over, you know, and I think everyone's sort of feeling the same way at the moment. I mean, market participants are now saying, well, you know, and I guess they would, you know, saying, well, listen, this is a lot of ammunition to support, don't hike, you know, now, because it's going to kind of destabilize the markets further and everyone's so nervous around that. But the reality is, I think, coming to answer your point sort of more directly, I mean, I think you've got to trade the fundamentals if you're a long-term investor. You know, if you're a short-term investor, I don't know, you know, or trader, you know, should I say, then anything goes, you know, then you've got to take advantage of short-term price movements. But I mean, from a long-term investor perspective, I don't know, you've got to look at this Chinese market and say, you know, sort of the CSI 300's at the lowest level from a price earnings multiple ratio since 2001. You know, stocks are starting to look pretty cheap there. What was interesting, by the way, is that foreigners came in and bought in August. I think there was $3.5 billion worth of purchases in August for the first time this year. So we saw sort of big outflows in July. That was followed by pretty strong inflows in August. And I think people are starting to sort of come back into that market and sort of the sell-off's been quite indiscriminate, right? So there's a couple of the large companies that are showing quite good value. You mentioned sort of retail sales in this number, online sales up 37%, you know, retail sales up sort of what 10.5 or whatever it was, 10.8, 10.5. You know, that's starting to look interesting, as you mentioned, the consumer sort of led story. You know, sort of half of the economy is now consumer driven, which is interesting. 350 million people joining the urban kind of workforce over the next 4 years. 7 million college graduates coming online every single year. You know, this is a big machine that's sort of spooling up. And people that argue in favor of China saying these guys are making long-term investment decisions. You know, they're betting on the future, and you kind of got to bet on them to win. 40 years ago, China was the size of the Netherlands. You know, today it's the second largest economy in the world, and it's a pretty powerful machine.
What about the rising debt for corporates? A lot of reports coming out saying that if you look at the Shanghai Composite currently, a number of companies there over the past 12 months, we've seen debt levels increasing. Does this not make you nervous?
I think this is a worry. I think to some degree, this is a very broad statement. I mean, it's balanced out by sort of a 49% personal savings rate in China, right? So, I mean, you've got a very undergeared consumer at the moment. You've got certain enterprises, of course, that are taking advantage of kind of low, as the central bank lowers reserve ratio requirements in China and lowers interest rates, as Gary says, 5 times since November, I think, last year. You know, that's going to stimulate companies taking on debt to try and expand, you know, and that's part of this whole, you know, the market's funny. We're all calling for these sort of stimulative measures, but when a consequence of lower rates is companies and people take on more debt, you know, so you kind of can't have your cake and eat it, you know. So I know you could, if you were arguing for the growth story, you could argue that it's stimulative to some extent. Of course, one's got to watch those debt ratios for sure.
I think that's exactly what I said to Jimmy this morning. You can't keep cutting interest rates and then wonder why people are taking on more debt.
Exactly.
But, and I mean, you obviously, you know, China, it's interesting, growing from the size of the Netherlands to where it is today. I mean, how much of this do you think is priced in? I mean, how much more growth can China, you know, actually deliver? I mean, I don't know. Is it still an opportunity, or is this priced in? I mean, should we be looking at Africa and India and other emerging economies?
I think that's a great point. I mean, I think my answer to that is it feels to me like China's growing up a little bit. You know, sort of all these things that they're putting in place, the circuit breakers, you know, that they're kind of putting in place into the market, you know, sort of at the moment, you know, all these sort of effects and measures that China's slowly sort of working their way through, and growth coming down sort of as a, you know, as a consequence of that, or as a consequence of this massively high growth that we've seen over the last sort of 15 to 25 years. It feels natural to me in a way, you know, another way of, you know, what you're saying is just you can't carry on growing at 10% forever, you know, I mean, with at such size. So I mean, it's, you know, a 7%, you know, sort of economic growth, or you know, Citibank says the numbers are bogus, it's 4%, you know, those are the real numbers, whatever, you know, whatever they are, you know, it seems like it's sort of naturalizing to some extent.
And one of the other reforms that came out this weekend was for the state-owned entities. They're unveiling these reforms. How significant are these going to be to China?
The stats that I've read say that a reform of the state-owned enterprises that are struggling, what they call sort of the zombie industries, will add about 33 basis points of growth per annum to the Chinese GDP numbers. So those reforms done correctly, I think, will be stimulative again to the Chinese economy overall. What was interesting to me is I read something recently that said that Chinese state-owned enterprises are operating in 48 countries around the world. They've spent $7 billion year to date investing in bridges, high-speed trains, infrastructure. I mean, again, you know, I think you kind of got to look at some of the things that are happening behind the scenes with Chinese state-owned enterprises and Chinese companies as a whole. One last thing on that point, I mean, something that I haven't seen spoken about a lot in the press is this kind of $60 billion sort of state-funded sort of stimulative push into small and medium-sized enterprises to help with sort of the functioning of these small businesses. Apparently 10,000 small and medium-sized Chinese businesses are opening a day. I mean, that's phenomenal.
Kerry, thanks so much. We'll have to leave it at that. But thanks always coming in with a great insight. Kerry West Fynn, he's the Chief Executive of Alpha Wealth.